Crypto in 2009 was a weird thing. Only 5 friends were casually talking about it. 13 years later, most institutions still have doubts about the so-called future. Of course, they still have doubts, but their clients with trillions of dollars in capital don't. As we already said, we need institutional funds to grow crypto market caps even more. Giant whales are coming to terms. Crypto is here to stay. We, the retail investors, knew about it a long time ago. $3 trillion was the estimated market cap of all the crypto in 2021. Bitcoin returned 100% simultaneously during that same period, and Solana gave a 10% return to backers. No wonder $3 trillion were lying around. As many holders experience, there is as much money to be made as leveraged accounts to lose. We're talking about a market with $2 trillion and our friend Gary. No, that's not Gary from SpongeBob. That one must hold Cardano. We meant Gary from the SEC, who knows about those $2 trillion. He plans oversight of crypto markets to protect investors. More regulation means more visibility, less fear, and more money. Imagine what crypto could do with more money and a reliable regulation structure that ensures the core values of decentralization. It seems like a utopia, but institutional funds are no joke once they come piling in. Gary said the SEC plans to register and regulate crypto platforms. He shows up a month later on Biden's executive order. But he has a point. There are reasons to be worried. Last year, $14 billion was stolen through a host of scams and cyber attacks. The SEC and Commodity Futures Trading Commission address exchanges that trade crypto security tokens and commodity tokens. Today, the SEC only oversees those that trade securities. Gensler compared crypto asset to alternative trading using equity and fixed income markets. Here, he distinguishes a critical difference. Institutional investors use equity and fixed income markets. At the same time, crypto platforms have millions and sometimes tens of millions of retail customers directly buying and selling on the platform without a broker. Gender has thrown a curveball at stablecoin, saying that the $183 billion market presents concerns such as illegal activity. That's nothing new. Anything that looks like a bank but isn't is a concern for the SEC. According to Gary, seeing the glass half complete, crypto-to-crypto transactions allows users to skirt the traditional banking system, making it harder to track money laundering, taxes, and compliance. Because we all know there's nothing like that in mainstream finance. He also said stablecoins are often owned by crypto platforms. From here, we can hear Tether taking notes. But jokes aside, much of those remarks are true. And it doesn't help, truly, when they pull off schemes like Quadriga CX or the monumental rug pull on the Squid Game token. Bitcoin and Ethereum prices have rallied for over 2 weeks with new money. I mean at a Breaking Bad level of capital. Precisely 180 million in cryptos just last week. And the week before that, 244 million were invested. They say, follow the money. Of those 188, 144 million were placed in Bitcoin-focused funds, while 23 million were in Ethereum-focused funds. Context helps since, we got the conflict in Ukraine and the first time in a half a decade that the Fed raises interest. In the last 2 weeks of March, 388 million was the net total for institutional investments. This is great news and even poetic history. Listen to what a board director has to say. Even if firms aren't on board with the digital assets movement, they have no choice but to become educated because their clients are constantly asking them about it. Clients are constantly asking about it. Big firms have to oblige when their clients ask for more crypto exposure. Even big names of traditional banking are coming on board. Bartlett, co-head of operations for the bank's global markets business, said he was leaving the firm to move into cryptocurrency. Bartlett accepted a position as VP of Global Financial Operations at Coinbase. In a post, he wrote, "Now it's time to take that experience and follow my passion for helping enable the next generation crypto economy." He isn't alone. Talent migrating from traditional markets in crypto is an ongoing trend. And I can hear that phrase again, follow the money. Follow. Stephen Clark said firms need crypto professionals for middle office, portfolio management, product development, product management, and working for market makers. Supply creates its demand. Although investment firms think that it's still early for crypto, the demand is getting out of hand. Imagine a millionaire sitting on piles of money invested in federal bonds because the hedge fund advisor told him to just wait and see. Suddenly, he sees his nephew, 19 years old, winning with Sol 28% in just a week with $1,000 on their account. Curves, head of Galaxy Digital Asset Management, a crypto-focused asset management firm with around $3.1 billion under management, said he would be shocked if most institutional firms weren't spending some time with crypto. It's getting harder by the day to find new talents to recruit. Soon, companies will begin to fight each other for crypto talent. As more talent becomes available, more companies will offer crypto. And the snowball continues since that demand won't back out on cryptocurrencies, making with its liquidity a less and less volatile market. A market with lots of big trades since 2020, appearing from time to time in the news and your nearest market cap, even if you track transactions above $100,000, well, has been growing dramatically lately. From 2021 to 2020, institutional buys on Bitcoin have grown 9 times, reaching the astonishing 1 trillion mark. And that says a lot for the future of the industry. Many whales are making big waves on the market. And talking about waves, top Bitcoin whales bought the last dip at 6,000 BTC a day, so they're already swimming among us. A lot of good implications come when Bitcoins become mainstream to institutional. With such an increase in liquidity, market manipulation will diminish. A whale can't make tsunamis at sea. As hedge funds are beginning to look for crypto talents, big players are already setting their eyes on the Bitcoin price. The world's largest fund is planning to start exposing itself to crypto. Months before this day, Ray Dalio revealed he owns Bitcoin, which he describes as an incredible achievement. Thanks to that first step of Bridgewater, it's only a matter of time before, as a domino effect, adoption increases in the coming years. $150 billion in assets under management could lead to a leading case in institutional money towards Bitcoin. That's not the only good news for crypto. $56.6 trillion in global institutional pension fund assets are available worldwide, hence the speed Cardano could get with that money may move a little bit. For instance, the Houston Firefighters Relief and Retirement Fund bought 25 million Bitcoin and Ethereum. That fund manages around 5.5 billion. It's a small part, but it's something. But that something is going slowly but steadily to the natural path of mainstream adoption. Those confusing faces people make once they enter Binance that'll be a thing of the past. The SEC is employing new regulations to protect investors. The retail investors? Nah, the institutional investor poured over $400 million in the last 2 years, so guess who would be more protected? Yeah. Until those hedge fund managers are worried because crypto talent is scarce. Prices are moving, the clients are asking for it, many pension funds have already bought crypto, and the biggest hedge fund with over $150 billion in management is taking Bitcoin, seriously. Many will add to the overall market cap, a market cap with billions already from Tudor Investment Group, Howard Assets Management, and crypto hedge funds. All this resulted in the constant accumulation of institutional money boiling under the shadows to be a part of this ecosystem that embraces freedom and decentralization. No wonder those market conditions are better. The volatility we face today is nothing compared to what it used to be. That's all for those institutional funds coming in. The involvement of institutions in space has a lot of pros. More liquidity means less manipulation. If you have fewer killer whales doing their job, you get more of a steady market. 2022 will be an even bigger year for crypto as the market will grow to reach 1 billion people. Institutional and retail adoption will continue its current trend. Last year, Tesla, Galaxy, MicroStrategy, and Square added Bitcoin to their balance sheets. The future ahead of mainstream adoption is inevitable. But when it comes, it'll be up to the investor if he bought some at the right moment or waited until it's too late. The following steps are more countries making Bitcoin a legal currency, as in El Salvador. And with popcorn in one hand and the keyboard in the other, we will see what central banks have to say about it. But what do you think of this institutional welcoming? We would love to hear your thoughts. We always appreciate that. Like for YouTube adoption and subscribe with the bell on so you can tune in the day that central banks make their move. See you then.